Hi everyone, this is Stephen from Share Navigator with your options update. It's Saturday, November the 8th, so we're just doing a review of the trades we currently have on and the trades that we didn't place. So you can see we couldn't have got our timing any better with our SPY trade yesterday. That's a new trade, our December short put, the 620 short put. You can see here we're up $129 already on this particular trade, and we only put it on yesterday. So if you have a quick look at the chart, you can see why. You can see at one stage yesterday, the market was down over 1%. So we sold the put option. And for those of you who are new, just a very brief introduction to the put option, the short put option. That's basically where we wrote an insurance policy, allowing the stock to fall further. And we picked the 620 strike. So our trade had a 94% probability of profit. So we benefit in three ways: if the shares go up, if they go sideways, and they can even fall, so long as they don't fall below 620. And with something, an ETF like SPY, that's a two standard deviation move there, which is only has a 5% chance of happening. That's why our probability of profit is so high in the trade. So basically, in very simple language, we insured the value of somebody else's S&P 500 shares or SPY ETF to the value of $620. It was trading at about 664, I think, at the time. So we allowed the share price to drop before we'd actually have to go and buy them. And like any insurance policy, we get paid for putting it on. So the full trade details are in the members area there. Go and have a look at that. So that trade is going well. That's great. We're going to leave that trade continue on. I'm going to just let it expire. Yesterday, I put on a bull put spread version of that, the 625, 621. I was demonstrating to a new client a lower risk way. So the short put is where we'd have to go and buy. The bull put spread is just the short put with a bit of protection underneath, and it's a defined risk trade. So in other words, we know exactly what we can lose. You don't make as much money in this trade, but you know exactly what you could lose in advance, and it's still a high probability trade. It's great for people with small trading accounts. So when I say small trading accounts under 10K, maybe the bull put spread is a better sister strategy to the short put strategy. So you can see that's up as well there. And then, of course, we have our NVIDIA long put there that we put on as part of our course. And you can see that's up $376. So we just bought a put option on NVIDIA. We plan on selling out of that if it reaches, I think, about $45. I think it's traded at 38 last. So we're doing quite well on that particular trade. Looking at trades that we didn't place. So I'm going to start off with crude oil, first of all. We're still interested, but look, it's still kind of hovering around this 20-day moving average. Yesterday was the first day it didn't create a lower low in a while, so it was good. We might put on that 55 strike. We're just holding off. Again, the big risk with crude oil is if there's a ceasefire between the UK and Ukraine and Russia, which I hope there will be, by the way. But if that did happen, you can imagine what would happen to oil prices with the thoughts of Russian oil coming back on the market. So we have to have that in the back of our heads all the time. The other trade we looked at yesterday was TLT. This is a trade I really like. I'm just waiting to get a better premium. So this is an ETF that tracks treasury yields in the US. It doesn't move too much. You can see like what it's moved for the year between 85 and 92. Doesn't move a hell of a lot. That's brilliant for us when we're selling put option premium. So we're looking at selling the $87 puts on this out to December. I'm just waiting on better premium, and that is a trade I will apply. And again, in terms of asset allocation on your account, you can do a lot of contracts on that, because if you've got a sign in that, it's not the end of the world. You're getting paid a nice 4% dividend. And as I said, it doesn't move quite a lot. The only reason you wouldn't buy this is if you felt interest rates were going to go back up, which I don't think they will. And then finally, the other trade we're looking at was Meta. Now, we like this for a long-term investment play. It's going to be added to our stock portfolio soon. But we're looking at it from a long call perspective as well, where we buy a call option instead of buying the stock. And what we wanted to see was this series of lower lows. We want them to stop first before we get involved in a call option. And you can see yesterday, although the stock finished up 0.5%, it was actually down 2 or 3% at one stage. And that is a lower low. So we're still not ready to place that trade yet, but we're monitoring it. But for those of you who are interested in a longer term stock portfolio, I think that's a stock you could add there. Okay, this is Stephen. Just with a wrap up, we've done really well in our short puts recently. Again, just our stats, folks, on the short put strategy is 93%. We're winning 93% of the time. And our portfolio that we started at the beginning of the year using that strategy is up 47% for the year. So the strategy works. It allows you to profit in three different ways and puts the odds of success in your favor. So it's well worth visiting. Okay, thanks and bye for now.